Welcome back to Why Talk with Akanksha. Today, I'm going to introducing a fellow YCEEYA. He's a super enthusiastic person. His name is Gaurav Wadekar. He's been associated with YCEEYA over 2 years now, and he is the director of Just to Trade. Let's welcome Gaurav. Hi Gaurav.
Hi Akanksha.
Thank you for coming on Why Talk.
No, thank you so much for inviting me.
It's all my pleasure.
Thank you.
Okay, let's get to know Just to Trade. Tell us about Just to Trade.
Sure. Just to Trade is a global brand. We have presence in 12 countries, access to 30 exchanges across the world. So in India we are registered as Just to Trade Private Limited, and we are helping Indian investors invest in international equities.
International equities. Okay, international equity market investments is not common. Nobody knows. Most of them don't know about international markets, international equity investments. So why is that?
In general, if you look at Indian investors, awareness about equity investment itself is very low. Just to give you some facts, about 2% of Indian population invest in international in equity markets, and which is as compared to US, where it is about 30 to 40%, very low. So there has to be some effort put by everyone to ensure that general awareness about equity investment increases. Well, coming to international equity, yes, I agree that the awareness is low, but then with advanced technology that we have, information that we have on our fingertips, and the simplified rules and regulations that we know now, it is going to become easier than ever to invest in international equities.
Okay, you just mentioned about the regulations. So what are the regulations or the legal stuff that Indians should know about investing in equities abroad?
Sure. The RBI, the Reserve Bank of India, they have something called the Liberalized Remittance Scheme, or LRS. Under this scheme, people can invest about $250,000 per financial year. The money can be sent for investments in equities, mutual funds, exchange traded funds, real estate. So there are quite a few things that people can do with their money when they are sending them abroad.
Okay. So is there a minimum sum that you should invest abroad in the international equity investments?
As a company, we do not have any policy around minimum investments, but we generally suggest people to start with at least about $1,000 to $2,000, because that gives enough to cover the transaction cost, and also to play around with your money to basically diversify a little bit. So that's a decent amount to start with.
Okay, so HNIs are not the only ones who will be investing?
No, not at all, not at all. Even retail investors can take advantage of global investments.
Okay, nice. So what kind of support do you provide your customers?
So when we are talking about international equity, having global experience is very important. So our team is poised to have that, because we have that global experience. So with the global expertise that we have, we are helping people understand the importance of equity first, and then giving them benefits of investing in international equity. We provide regular training sessions, conduct regular webinars, constant emailers on a daily basis are sent to the customers with information about the markets. Regular research reports are delivered to them. So there is a lot of hand holding that we do, which helps the clients to take informed decisions and reap the benefits of global investments.
Okay, so global investments, talking about international equity investments and the Indian investments, both the markets, how different are these, and what kind of returns can we expect?
They are not different at all. I mean, if you really look at it, every country goes through its own economic cycle. So the only difference is that they are in a different country. But as far as returns go, if you talk about specific markets, like for example, if you talk about US market, it has grown at about 8.4% annually as compared to the Indian market. So I am comparing S&P 500 index versus NSE. Also, if you really look at the exchange rate, so the Indian rupee has depreciated by about average 2% annually, vis-a-vis the USD. So which means that if you look at the exchange rate adjusted returns, then it stands at about 12.5%. So which is almost double what Indian markets have generated. Also if you consider like Nikkei, that is Japan's index, it has outgrown Indian index by about 4% average annually for last 5 years.
Okay, so so there is risk attached. What's the kind of risk? Because where there's return, there is risk attached. So what's the risk?
So equity investments have inherent risk associated with them, but if you really look at the companies which are listed in these exchanges, so if you talk about the US again specifically, then you're talking about global companies with global exposure. So the ability of these companies to generate returns vis-a-vis the risk associated by investing in them is pretty low. So the risk return reward ratio is pretty balanced. So that way there is no risk. Again, a lot of people raise concern about currency risk, but as I told you earlier, the Indian rupee is depreciated about 2% annually, and we don't see that it is going to appreciate in the near future at least.
Okay. And what about taxes? Because you are investing abroad, right, into international markets. So what's the tax?
So international equity investments are taxable. So there is short-term and long-term capital gains associated with it. So when you are filing your tax returns, you are supposed to declare your international investments. Although everybody is sort of aware of it, but we generally recommend you to talk to your accountant when you're filing tax, because they are the right people to guide you.
Okay, okay. And Just to Trade provides, you just told me that Japan Nikkei and US S&P, the Indian market. So Just to Trade helps in several equity international markets, right?
Yes, yes.
Okay. So it does everything.
Yes, yes. So what we do is that we have a product called MMA, which is called the multi-market account. So only one account gives you access to about 30 exchanges. So it becomes very easy for an investor. He just logs in and then he can invest in different markets. Although once the client comes on board, we have a detailed training session to help him understand as to how to access the markets, how to put the trades, and all that. So
okay. So what are the charges attached with Just to Trade to invest in the international markets?
yeah, so we are a very competitive company as far as charges are concerned. We are a discount broking firm, so basically we charge about $1.5 per trade or about 0.007 per share. So whichever is higher. But having said that, we are very transparent about the charges. All our charges are given to the client upfront, so that it is very easy for the clients to calculate their returns after considering all the charges.
Okay, so what any suggestion you would like to give the Indian market for investing in international equity markets?
I would say that everyone should really think about equity investments, because by far equity investments are the best investments. They beat all other investment options. So in general, equity investments have to be part of one's portfolio. And in particular, if you really look at international investments, you are talking about like global companies. See, I feel that you are not investing in individual markets, you are investing in individual companies. So if you really ask me that is Apple a good company, I would say yes. With about almost 130 billion in cash, $500 billion market cap, with such innovation that they bring to the table, or a company like Amazon, being an e-commerce giant but still profitable. So all these companies can actually give you the returns which probably are not as easy to get in other markets, and at the same time, the risk involved is pretty less, it's pretty downside. So I would seriously, ask people to think about investing in international companies, because that is where you can actually get excellent returns.
Okay, as you were just explaining this to me and giving a suggestion, just something popped up. I'd like to know that you help them diversify their investments across the globe?
Yes, definitely, definitely. So see, everyone is looking for that one investment, like the holy grail, that it is going to give them everything, but it is not possible. So you need to diversify. You need to consider different options.
So the portfolios and everything.
Exactly. So one of the options will definitely click. So that's why it is very important to, so don't put all your eggs in one basket.
Right. Okay. So we just finished the 101st event. How was the experience?
Wow, it was truly an amazing experience to be present at the event with so much knowledge to be shared.
Thank you.
Companies like us are always looking at opportunities to take ourselves to the next level, and the sessions that were conducted were helping us think about as to how we can do it. We got an amazing response at the event. Everybody wanted to know as to what international investments are all about and how do we go about it. So also we got to meet like so many new YCEEYAs, which
right place to meet everybody.
Yes, and whom
you've never met
whom
actually.
we have never met. So it was really good because now I think we are growing so fast that it is very difficult to keep up. So events like these are helping us to know each other and have that at least initial touch point so that we can take discussions then offline. So it was just a great event, and I'm just glad that I was part of it.
So there was value add.
Definitely value add. For a company like us, which is global, but in India our presence is relatively new. We are looking at opportunities to promote ourselves, and the event was just the platform we were looking for.
Thank you for attending the event and coming on YCheEEYA.
No, thank you so much, Akanksha, for having me here.
Thank you, Gaurav.